I know I promised you guys more Forex setups, and I've kind of been slacking on that. Well, I'm here to rectify that today. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a continuation triangle on the US dollar Swiss franc currency pair. We'll get to that in just a few minutes, but first we have a few active trades to look at. And later on, today's trading maxim. It's Friday, guys. Let's do this. Remember to click the subscribe button and hit that bell so you don't miss any of these great trade setups. Let's take a look at our active trades. This is the Palladium setup from a month or so ago. It hit our first target on May 5th right here, and we closed half of it for profit and set the stop to break even on the remainder. Then this little scoundrel, did I really call it a scoundrel? Popped up here on Monday, look at that thing, and hit our break even stop. So we're done with Palladium for right now. Wow, McDonald's Corp is looking really good. Hit our first target right here. We got half off for profit and set the stop on the remainder to break even. I mentioned the other day that we were looking for it to come down here and hit the parabolic SAR, which it did on this bar, and it popped the PSAR up here. Now we're waiting for the PSAR to drop down below our break even stop, and then we'll start moving our stops down with it on the second half. The US dollar Mexican peso closed below our triangle right here on about 77% of the average volume, so we sold a half size position on this just ahead of the close last Friday. Then it pushed back up into the triangle on Monday and closed up there, so we closed this trade for a small loss. If the volume and the volatility continue to drop, which they're still doing right here, I will just redraw this triangle and we'll try it again. We've been waiting for this weekly pattern on Bitcoin since late February, and we finally got a potential trigger today. Now I'm recording this video late on Thursday, but it's looking promising for a trigger tomorrow. Remember, you will use the weekly volume to determine your trade size, but the daily ATR to determine your stop loss and target. Otherwise, business as usual on this one. Lastly, here's the Kraft Heinz daily bear flag I told you about in Monday's video. We had a squeaky close right here, and it was only 72% volume, and that's sort of a wacky little bullish pin bar and all. So I went with Wednesday's close right here, and I sold it, especially since it was over 100% average volume. I know this is a little tweak in our rules, but sometimes you have to fly by the seat of your pants. If Tuesday's candle had been as big as Wednesday's candle, but without sufficient volume, I would have totally passed this one by. But Tuesday's bar was so small and so close to the line, I was willing to fudge on it. Remember my maxim, a line is never just a line, it's always a zone. So my stop loss on this is 30.2, and my first target is 27.80. And that's it for the active trades. Let's take a look at today's trade pick. You guys told me that most of you prefer Forex setups, and I've sort of been slacking in that area for the past few weeks. So we're going to straighten that out right now. Here's a daily chart of the US dollar Swiss franc with a really nice looking continuation triangle. Typically a continuation triangle breaks in the same direction as the incoming trend. You can see it has a very strong incoming trend right here. Then it just started banging back and forth into this ever-tightening spiral. I'm anticipating the USD Swissie to break to the upside, even though it will typically break in the direction of the incoming trend. In this case, up. I will still take a break in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily candle close above the triangle, or we're going to sell a daily candle close below the triangle. On the breaking candle, to enter a full-size position, you want to see the volume bar reach up to the volume average right here. If it doesn't quite reach the average but does reach 75% of the average volume, I'll open a half size position to reduce risk. You can calculate the percentage by dividing this volume right here by this volume average, and you should get 0.75. If you don't get at least 0.75 on this, I suggest you stand aside on this trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So let's say, for example, this thing breaks up here, and you get a close right here, and just ahead of the close, you're going to buy, and then you're going to look, and on that day, you're going to look down here at the ATR, multiply that by 1.5, measure that distance behind your entry for your stop loss, measure 1 ATR above your entry for your first target. And of course, it's just the opposite if it closes to the downside. If after entering the trade you get a close back inside the triangle, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the triangle should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss to break even on the second position. I will only risk about 2% of my account on each trade, and that's today's setup on the US dollar Swiss franc currency pair. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, let's go back in time for the maxim of the day. Tim's trading maxim number 32. There are as many profitable trading styles as there are profitable traders. I keep telling you that trading is very personal. We all have different minds, different ideas, different pain tolerance levels. In just about every video I've told you that what works for me may not work for you. I have to admit that I had been a trader for quite a while before I understood what my mentors were saying when they told me this. But it's true in all areas of our lives. We all view our world differently, and the things that we are comfortable with differ dramatically from one person to the next. As you develop as a trader, you will find tricks that you like and implement into your trading. You may start trading like your mentor, whoever that may be, but you will begin to add things that you like from other traders, and eventually you'll sprinkle it with a little bit of your own style. Then you'll have your own unique trading style that works for you, but may not work for anyone else. There's a lot of art in trading. If you're having success, don't let someone else tell you that you're doing it wrong. Remember our USD Swissie trade plan here. We're going to buy a daily candle close above the triangle or sell a daily candle close below the triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. Also remember to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put a link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. Don't miss the next installment of the Trading Education Series next Wednesday when I'll discuss what is the currency market. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great weekend, and I'll see you Monday.